Hello there. So let's talk about something that's on a lot of crypto investors' minds right now. What on earth do you do when the market dips and your portfolio is looking, well, a little worse for wear? We're diving deep into the tax side of crypto trading losses here in the UK. Now, this stuff can get complicated fast. So to make sure we get it 100% right for you, we've put this whole thing together with the absolute specialists over at Pro Tax Accountant. They've lent us their expertise to cut through the noise. Ready? Let's get into it.
Look, if you've opened your portfolio recently and felt that pit in your stomach, trust me, you are not alone. It can feel like a huge setback. But what if I told you that from a tax point of view, it's not all doom and gloom? Seriously, those losses, the ones that drive you crazy, could actually be a secret weapon for cutting down your tax bill. Stick with me and I'll show you exactly how to find that silver lining.
Okay, so why does this matter right now? Well, get this. For the 2025/26 tax year, your tax-free allowance for capital gains is just $3,000. A few years ago, it was over £12,000. So what does that actually mean for you? It means that even small profits from other things, maybe you sold some stocks or even a piece of art, are way more likely to get taxed. And that is precisely why knowing how to use your crypto losses has gone from a nice-to-know trick to an absolutely essential part of your financial toolkit. So here's what we're going to cover. First, we'll reframe how we think about losses. Then, the big one, how HMRC actually sees your crypto. After that, we'll get practical. How to do the math, how to use losses to your advantage, and the super important rules and records you need to know. And finally, we'll point you in the right direction for some expert help. Right, let's start with that new mindset. It's so easy to see a loss and just think, well, that's it, money gone. But I want you to start thinking of it as a tool, as the beginning of a really smart tax move. This isn't about finding dodgy loopholes, not at all. It's about playing by the rules of the UK tax system, so you're not paying a single penny more than you have to. And here's the bottom line. HMRC's system is all about taxing your net profit. And you can't work out a net profit without taking your losses into account, right? So a crypto loss isn't something that just disappears. It's a number you can and absolutely should declare on your tax return. Once it's on there, it's an official tool you can use to chip away at other gains, which could seriously lower the amount of tax you pay. It's how the system is designed to work. Okay, so before we can talk gains or losses, we have to get one thing crystal clear. What does the taxman, HMRC, actually think crypto is? Is it money? A collector's item? Something else? Nailing this definition is the foundation for absolutely everything that follows. It's super important. And this lays it out perfectly. HMRC is very clear on this. Your Bitcoin, your Ether, whatever you're holding, it is not currency like pounds and pence. Instead, they call it a crypto asset. And that one word changes everything. For tax, you have to think of your crypto just like you'd think of a share in a company or an investment property. And because it's an asset, the moment you get rid of it, you're in the world of capital gains tax. So because crypto is an asset, the moment you create a taxable event, that's when a gain or a loss is actually locked in, is called a disposal. It sounds simple, but this is a hugely important idea. A disposal is basically any time you're not the owner of that crypto anymore. And it's not just about selling it for cash. This is probably the #1 tripwire where people accidentally create a tax bill without having a clue they've done it. Let's see what that actually looks like. Okay, let's run through these. Selling for pounds. Obvious, we all get that. But look at number 2, because this one catches so many people out. Swapping your Bitcoin for Ether, that is a disposal of your Bitcoin. At that exact moment, you've triggered a capital gains event, and you need to figure out your profit or loss on the Bitcoin you just got rid of. Pro tip, every time you hit that swap button on an exchange, I want you to think disposal. Same goes for buying a coffee or a laptop with crypto, and yep, even giving it to a friend can count, though there's an exception for spouses and civil partners. All right, so we know what a disposal is, but how do we actually do the maths and work out the final number in pounds and pence? The good news is, it's pretty logical. Let's walk through it together. It's basically a simple 3-step process. First, what was it worth in pounds when you got rid of it? That's your sale value. Second, what was it worth in pounds when you first bought it? That's your cost. The difference is your starting gain or loss. But don't stop there. Step 3 is where you can often make your loss even bigger, and that's a good thing for tax purposes. You can also deduct any costs you had when you bought or sold it. And here's a little nugget of gold for you. You know those little transaction fees the exchanges charge you on every single trade? Those are allowable costs. This means you can add them to your cost base. It's so important to keep track of these because every penny in fees reduces your profit. Or even better, it increases the size of your loss. And a bigger, properly recorded loss gives you more power to cut your tax bill. All right, this is it. This is the bit where all that theory turns into actual money saved. We know what a loss is, and we know how to calculate it. So how do we use that number to actually reduce our tax bill? Stay with me. This is the powerful part. So you've basically got two amazing options here. First, you can use your crypto losses to wipe out other capital gains you've made in the same tax year. Made a profit selling some shares? Boom, that crypto loss can shrink it. Sold an investment property? Same deal. But what if you don't have any other gains this year? Well, that's where the magic of option 2 comes in. You can carry that loss forward to use in the future. And get this, you can carry it forward indefinitely. That's right, a loss you make today could save you tax 10, even 20 years down the line. It's an incredible feature of the system. Let's make this super clear with an example. Meet Alex. He's a freelance designer in London. This tax year, his crypto trading didn't go so well, and he ended up with a £10,000 loss. He was gutted. But he also sold some stocks and made a £15,000 profit. Now, let's see how this works. Without the crypto loss, his taxable gain would have been £12,000. But because he properly declared his loss, he subtracts that 10 grand from his 15 grand profit. That brings his total gain right down to 5,000. Then he uses his £3,000 tax-free allowance, and his final taxable gain is just £2,000. That is a huge tax saving, all because he knew what to do with a loss. Now that you see just how powerful this can be, we need to talk about the rules, because getting this wrong can be really costly. HMRC has put some specific rules in place to stop people from gaming the system. And that's not all. Here's where most people go wrong. I know what you're thinking. This sounds like a great idea, right? Why not sell, lock in that tasty tax loss, and then just buy it right back so you don't miss out if the price moons? It seems like a clever workaround. But you can bet HMRC has thought of that one already. And here's their answer. It's called the bed and breakfasting rule. I know, strange name, but the rule itself is simple. If you sell an asset at a loss and then you buy back the exact same kind of asset within 30 days, that loss doesn't count for offsetting other gains. The whole point is to stop people from creating fake losses just for the tax benefit. So if you sell your Bitcoin at a loss, you have to stay out of the Bitcoin market for more than 30 days for that loss to be valid. Okay, this one is every crypto owner's worst nightmare, isn't it? Your hardware wallet is lost, the seed phrase is gone, your crypto is just, well, gone. It's trapped on the blockchain forever. It feels like the ultimate loss. So from a tax point of view, can you actually claim it? And the answer is possibly, but you can't just write it off. You have to go through a formal process with HMRC called a negligible value claim. To do this, you have to prove to them that the crypto is now worthless to you because there is absolutely zero chance of ever getting it back. If HMRC accepts your claim, they treat it as if you sold the asset for £0, which lets you formally claim the entire original purchase cost as a capital loss. All of this points to one golden rule, probably the most important habit you can get into as a crypto trader: keeping really, really good records. The responsibility to prove everything is on you. HMRC will want to see it all: what crypto, the exact date, how many units, and what it was worth in pounds at that moment. You need the bank statements, the wallet addresses, the whole shebang. Without a solid paper trail, trying to claim a loss or even just report a gain correctly becomes a nightmare and could land you in hot water. Phew, okay, we have covered a ton of ground here. From how the taxman thinks about crypto, right through to the nitty-gritty rules and pitfalls. And while this should give you a really solid footing, the fact is, crypto tax is tricky and it's always changing. Everyone's situation is different, and getting it right is just so important. And that brings me to this very important bit of housekeeping. Please remember that everything we've talked about today is for general guidance. It's here to help you understand the landscape, but it is not formal financial advice. Tax rules are complicated, so before you make any decisions, it's absolutely vital that you speak to a qualified professional who can look at your personal situation. And for that expert, tailored advice, we can't recommend anyone more highly than the folks who made this whole session possible. The specialists at ProTax Accountant deal with this day in, day out. They can give you total clarity on your crypto tax situation and pretty much any other accounting needs you might have. You can reach them on WhatsApp or give them a call on 0798 568 9912. Or just pop an email over to info@protaxaccountant.co.uk. Thanks so much for joining me today.